All right, everybody, July 1st, Monday. First announcement, I sent out the new issue of MMT Trader. If you'd like to get that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. So, new high in the S&P. You know, over the last few days, maybe the last week or so, I've been talking about the period we are in now with these reserve flows. And you know, I've been talking about these reserve flows for a long time. Again, I'm the only one who looks at this, who understands this, who knows how to apply this very precisely to market movements, pinpointing exact tops and bottoms based on these flows. Anyway, we are in the period now of what I call reserve trough. That is when bank reserves have been drained down, okay, as a result of the Treasury collecting tax deposits. Now, normally, when the debt ceiling is not in effect, the Treasury has the ability to manage reserves because it sells bonds, and that acts as a reserve drain. People think that bond sales and Treasury sales are borrowing. That is not borrowing. It is reserve drain. But with the debt ceiling, and again, I've been all through this with the debt ceiling, Treasury cannot sell new bonds, so it has created a shortage that has caused yields to go down, it's caused bond prices to go up, da-da-da-da-da. You know the story. But this reserve trough is a timing point normally for a market correction. We saw one in March with the reserve trough. We saw one again in May with the reserve trough. And I had been anticipating one now. And it may still happen, but in a fashion that I call just a static market, kind of a churning market. But over the weekend, we got the U.S.-China trade truce, okay? Things, they seem to get along, this time Trump and Xi. And so there was no announcement of tariffs or new tariffs being enacted. Now, I believe this lifting of the threat of sanctions is now a positive for the market. The monetary conditions, and I think I called this negative or technical monetary condition in my last video, or my last two videos, that is still in place. However, if you look at sentiment, if you look at the level of bullish sentiment, if you look at the level of bearish sentiment, and most interesting, I think, is the level of neutrals. The level of neutrals has been above the historical average since the beginning of the year. I mean, 6 months, we've had a very elevated level of people who would classify themselves as neutral, no opinion on the market. They didn't really jump in when the market sold off in March and May, and so far they've been on the sidelines as the market has moved to new highs. I believe the neutrals will eventually chase after the market highs, and that will draw them in. So while a negative technical condition exists, I think the lifting of the threat of additional tariffs and trade war, if you want to call it that, is a positive for the market. And as we come towards the end of July and into August, some major developments take place, and also in September. Now, I talked about this in today's issue of MMT Trader. Again, if you want to read about it, and I strongly advise that you read about it, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Now, aside from the stock market, we saw today a correction in gold. Now, gold has been correcting. I think we hit 1440 a week or two ago. We're down in the 1380s now. I mean, it's normal to see a correction. We are also seeing a rebound in the dollar. What's interesting about the dollar is, if you remember, over the last year, maybe the last 16 months or so, when these trade threats and the trade war was really, getting going, every time there was an announcement of new tariffs or an escalation in the trade war, what would happen? The dollar would rally. Now, the trade war, there's a trade truce, no tariffs, and what happens? The dollar is rallying. So you see the mindset here. It is a myopic, single-minded focus that the dollar can only go up. Traders are now rationalizing any condition as being bullish for the dollar. I've seen these sorts of psychological states of the market before, many times. And when the market rationalizes any view to support a one-direction market, that is indicative of extreme sentiment, in this case, extreme bullish sentiment. And what do you want to do in those cases? You want to go against it. The dollar peaked in May. It has come down. This is a correction off recent lows, and I suspect the downtrend will resume sometime later this month. Finally, on the issue of mental game, which is something I talk about very often and which I have said many times, is the number one most important factor to success. And it does not only apply to trading, it applies to life. And the key aspect, the key understanding, if you are to embrace the concept of mental game and move yourself forward in a direction of success, is that comfort is the destroyer of success. Comfort is the killer of progress and advancement. In order to advance, in order to progress, in order to achieve success, and you can talk to anybody who has ever achieved success, they did not do it by seeking the comfortable path. Discomfort, resistance is the only way, and this is a universal concept that exists throughout any sort of success process, whether that's trading, whether that's in the field of business, whether that's in relationships. It doesn't make a difference. Those who seek discomfort, or let's put it this way, those who avoid comfort, and this is the case I've been making so long with these people who are chasing the system fairy. So many of you believe there is some magical system that will take you on this beautiful ride to success, where you're going to have all these winning trades and sometimes very, very small stopped out losses. And it's out there somewhere. And boom, 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 you're going to be making money every single day or every week. Some people every week, it's too much of a wait for them. They want it every single day. That is the epitome of seeking comfort, and it does not exist. That will ruin you. On the contrary, who can stay in a position for years? These macro trends, they don't flip around from month to month, day to day, week to week, even year to year. They maintain, they stay. Very few people, and that is not comfortable. It is not comfortable. You could wake up for weeks, even months at a time, when the position is not working out for you. But those with patience, those who can deal with discomfort and have the ability or the self-control to ride that out, that is where the big money is made, the small money is made. That is where the success comes from. The key element is that patience, that ability to put off that instant gratification, that ability to walk away from what is comfortable and to embrace what is uncomfortable and to be able to handle that and deal with that. That is the secret. That is the secret. I help a lot of people with that. All right, everybody, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Bye-bye.